The Australian dollar crashes. Let's have a look. Hello everyone, I'm Florian Heise, and welcome to another episode of HeiseSays. I have my evening stein of coffee, and I thought we'd have a look at this article from news.com, written by James Hall. He's discussing the 18-year low that the Australian dollar hit today. Now, before we go through this, let's just jump to trading economics. We can see here on the chart the dollar's at 57.25. Look at that plunge, guys. And at some point today, we were at 55 cents. I think, did we hit 54? Was that our low today? Let me know in the comments, guys. I recall seeing it. Maybe I was imagining it. Maybe I was imagining 54. I think we got really close. We were very close to being on par with the New Zealand dollar as well. What does that tell us, guys? So let's have a look at this 18-year low. So the Aussie dollar has dropped to 55 US cents, the lowest since 2002, as the horrific global growth outlook combined with an emergency rate cut take its toll. Well, it was below. It was at that level before the rate cut even was announced. It just plunged all night. You were watching it. It's crazy. The dollar plunged to an 18-year low of 55 US cents as the global economic outlook crumbles under the spread of the deadly illness. The widely expected emergency interest rate cut to 0.25%, which Commonwealth Bank isn't passing on. Is your bank passing it on? Let me know in the comments. I think it's time to shop around. What I'll be doing is I'll ring up, because I'm with Combank. I'll ring them up and go, I want a reduction, put a 2 in the front of my interest rate, please, or I'll start looking around, Can't hurt to try, can it? So, it was priced into the currency, hangs tentatively waiting on details of QE, effectively encouraging consumer spending by printing more money and pumping it into the economy. Well, doesn't most of the QE just go into the stock market? So then hopefully you have the wealth effect. And does it actually work? Do we really want... Well, we've got social isolation. We've got businesses shutting down. It's definitely an interesting time to be alive, isn't it, everyone? It's definitely interesting. The Aussie was buying just 55.1 US cents shortly after lunch, the weakest since 2002. The dollar is seen as a proxy for global growth, Westpac senior currency strategist Sean Callow told news.com.au. I thought it was also used as a proxy for China. I thought it was used as a proxy for the Chinese economy. He said most major currencies have been weakened by the continual spread of the illness, as another 475 deaths were confirmed overnight in Italy, creating a horrible risk environment for investors as travel restrictions amplify. And Australia has essentially been, walled up now. Probably too late. Much too late. Russia closed their borders much earlier. How are they doing, guys? How are they doing as a nation? The Aussie seems to get overpunished when the global economic outlook deteriorates, he said. Well, it's because a very simple reason. A very simple reason. And this is the same reason why Australia weathered the GFC, because we're a quarry. We mine all these resources. We don't value add to them because our economy is very primitive. We're 59th in the world of complexity from the OECD. We're 93rd from the Harvard Atlas. We import all our complicated things because we couldn't make them here. And the biggest destination and source for all of our exports and imports is China. We're in bed with China, guys. We're in bed with China. It's that simple. And China is the manufacturing hub of the world, so if global growth is looking down, Chinese growth is looking down, Australia's looking down. And there you go, guys. 56 cents. I don't know why he's posting about the Wiggles, but okay. IG market analyst Carl Roeder said the US dollar strengthening against all others was perhaps the greatest red flag because it showed other defensive assets had been abandoned as investors retreated to lick their wounds. All other safe haven assets have been bypassed for dollars, as the only thing that seems to matter for the market is liquidity, he said in his note this morning. Market participants want cash in US dollars, but there's not enough to meet the demand. Meanwhile, Mr. Rhoda said investors would be eager to dissect RBA Governor Philip Lowe's explanation for the central bank's historic rate cut this afternoon, which saw the Australia's cash rate lashed from 0.5% to a new low of 0.25%. And I'll bring it up here. You can see, there you go, guys. There you go. Crazy. Clown world. We're definitely living in a clown world, aren't we? The devil will be in the detail. So how big this program is going to be, whether they'll have other measures to try and support the financial system and stimulate economic growth, he said. The impacts will reverberate through the market once we know that outcome. The central bank wasn't scheduled to meet until the first Tuesday of April. The Australian share market had lost hundreds of billions of dollars in the past 2 weeks, and is bracing for further heavy losses as businesses across the country grind to a halt. And let's just jump over here, guys. We'll have a look at trading economics. Look at the stocks. Oh, 4,700 for the ASX 200. There you go, guys. I'll bring up that chart. Let's see how that's looking. Let's see. Oh, shoot. Look at that. Look at that. Wow. Wow. Where's that going to head, everyone? The Australian share market. I've already read that. So the RBA cuts rates to 0.25. The central bank followed through with the widely expected move to slash interest rates to 0.25% this afternoon, 2 weeks ahead of the scheduled meeting on the first Thursday of April. It is the first time it has announced outside of a regular meeting since '97, and is a glaring sign of just how severe the situation is becoming. But guys, we all have complete confidence in the RBA's abilities to manage and intervene in the economy like a finely tuned machine. Do you think out of all of this mess, people are going to start to wake up and realize that the theories behind all of this, the economic system that we have now is proven to fail? We'll get more modern monetary theory. Will it go back to other standards? Will people start looking at Austrian economics? Maybe we need a revival. Maybe our politicians need to learn a bit more. Let me know your ideas in the comments below, guys. Governor Philip Lowe also announced other measures, including quantitative easing, which are designed to make sure credit remains available to individuals and businesses. The illness is first and foremost a public health issue, but it is also having a very major impact on the economy and the financial systems, he said in a statement this afternoon. As the illness has spread, countries have restricted the movement of people across borders and have implemented social distancing measures, including restricting movement within countries and within cities. The result has been major disruptions to economic activity across the world. This is likely to remain the case for some time yet, as efforts continue to contain the illness. My understanding is they're looking at having this cash rate for 3 years? Financial market volatility has been very high. Equity prices have experienced large declines. Government bond yields have declined to historic lows. However, the functioning of major government bond markets has been impaired, which has disrupted other markets given their important role as a financial benchmark. Funding markets are open to only the highest quality borrowers. The primary response to the illness is to manage the health of the population, but other arms of policy, including monetary and fiscal policy, play an important role in reducing the economic and financial disruptions resulting from it. So there we have it, guys. The stock market is plunging. Every day after day, we're getting a bounce down, bounce down, bounce down. That's after the repurchasing spending by the RBA has also increased. The Aussie dollar. Oh wait, that's how it exports. The Aussie dollar. It's now at 57, so it's come up again from when the article was written. There you go. It's not looking very strong, is it? And our cash rate. It's just nuts. So guys, what do you think? What do you think? Where do you think the dollar is going to finish up? Do you think we'll see 50 cents? Do you think we'll be worth less or the same as the NZ? Let me know your thoughts and opinions in the comments below. Thank you all for watching. Please like, share, and subscribe to the channel. If you're a fan and you want to help us produce content, there are a few ways you can support the channel. You can join us here on YouTube or on Patreon for a small monthly fee. You can use our affiliate links at Amazon or eBay for your consumer purchases, or Kucoin, an independent reserve for the crypto trading out there. We have merch that we sell from the HeiseSays website in the pinned comments below, and coffee mugs we're making with Teespring. And finally, we have PayPal if you want to contribute that way. Thank you all very much. Have a great evening, and I'll see you tomorrow. Bye for now.